Welcome back to another episode of the Good Question podcast by CoinSchedule TV.
Today's episode is extremely unique. Normally on the show I tend to dive in at the deep end of topics surrounding cryptocurrencies, in the sense that we use a lot of technical jargon and glide through complex subjects without fully explaining them to someone who may not be familiar with them. This is simply because the show is for those who are already familiar with these subjects and probably have been in the space for a while. Today, however, myself and my good friend Jim went back to basics to tackle some of the most fundamental questions someone may have if they're not familiar with Bitcoin or crypto. The reason I chose Jim to do this podcast was that, first off, he knows almost nothing about Bitcoin or crypto. Secondly, he's a massive skeptic, especially with regards to cryptocurrencies. And I knew that if I said something that was wrong or that he perceived to be wrong, he would call me out for my inaccuracies. As well as that, Jim's a smart guy who I knew would ask good questions. So big thanks to Jim for letting me rant at him for an hour about a subject he wasn't particularly interested in. Whether you're a Bitcoin believer or not, I think anyone who listens to this will agree that this conversation was interesting, insightful, and we tackled some very important questions. Don't forget to subscribe to the channel, like our video, and share it with your friends. I hope you enjoy. So, I've spoken to you briefly about cryptocurrencies in the past.
You've been constantly trying to convey that they're the future and that I should definitely be invested in them.
Yes, but you haven't complied with any of those demands, and I have the sense that you're not a cryptocurrency believer. I want to know what you think about Bitcoin and cryptocurrencies.
Not necessarily
Honestly.
Not that I'm not a cryptocurrency believer. I guess it's more that I'm skeptical about it just because I don't know enough about it.
Okay, fair enough.
Which is kind of why I want to learn more today. Okay. So I guess the first thing, we should probably start at the beginning. So I don't know that much at all. I know obviously there's a Bitcoin, there's Ethereum, there's like Litecoin and stuff like that, but I don't know what any of those terms mean or like why one's better than another or why, you know what I mean, like where they come from or anything like that. So could you explain that to me in like very simple terms?
So it's like the history of it happened when the 2008 financial crisis happened. Mm-hmm. The response from most people was outrage, and they would just be really outraged at the government, outraged at the banks. But someone called Satoshi Nakamoto decided to turn that outrage into technological activism, and they created something called Bitcoin, which is the first decentralized global currency that was ever created. Mm-hmm. And that was in 2008 that the white paper was released, and the white paper documented what this is, how it works fundamentally, and what its aims are. Mm-hmm. 2009 was when the actual technology was released, and that's when the first transactions were ever sent on the network, in 2009. Slowly but surely people started to research this and started to understand the possible ramifications of it and the implications of it. And after a few years of the network being used more and more, that's when other people with other ideas started to take the fundamental premise of Bitcoin and create their own version of it, which had certain functionalities that were better or worse or different than Bitcoin. Mm-hmm. One of the most notable ones is Ethereum. Mm-hmm. I think the crowd sale for Ethereum was in 2015. But the basic premise with Bitcoin and Litecoin is that they're payment systems. And that's all they are. Mm-hmm. They're payment systems, but they're fundamentally different from any payment system that went before it, because every payment system that went before it, whether it was with gold that was held in banks back before coins, or coins that represented gold, or paper money which was backed by gold, or now paper money is not backed by gold, which is that's the evolution of money up to this point. Mm-hmm. All of those various stages in the evolution of money had some kind of intermediary who would ensure that the person who was the buyer and the person who was the seller was compensated and treated fairly within the transaction. And so that would be a bank or a government. Well, the way that the cryptocurrency software and network is set up, it basically means that you don't need anyone to do that. You don't need a trusted third party to ensure that a transaction happens legitimately and properly. You now have code and you now have mathematics which ensure that same principle. But the beauty about it is that the code and the mathematics can't be corrupted, but the central intermediary can. And that's what we've seen happen over history like 1,000,001 times. You see banks who become corrupted by their control over the money, and governments have become corrupt over the control of the money, and governments whose control of the money is being irresponsibly used because they don't understand fundamental economic principles very well.
Right.
So the basic thing is that Bitcoin was the first cryptocurrency, the first decentralized payment system. Litecoin was a version of it. What the person who created Litecoin did, which is the beauty about open source software, they copied the software code from the repository, which is on GitHub, and they pasted that into their own system and then created their own version of Bitcoin, but they tweaked some of the characteristics of it.
Okay.
So that was another payment system, but it had some variation from the original Bitcoin. Whereas Ethereum is fundamentally different.
Right.
Bitcoin and Litecoin are built in such a way that ensures that they can only ever really be used as payment systems because of the actual language of code that they're built on. Whereas with Ethereum, the idea behind it is that it is a payment system, but it's meant to be a whole bunch of other things as well. The idea is that it's a global computer, and with that global computer, there's a lot of things that you can do which you could never do before. So a simple way to think about it is that every major website, every game that you use, every app on your phone, all that data is being ran from data centers somewhere in the Western world. These massive data silos where they're storing your information and they're sorting everything out and they're sending it all over the world. But the problem with that is the same that's the problem with a government or a bank, that when these centers are hubs of data, they can become corrupted. Right. Intentionally, or they're vulnerable, and they're vulnerable because of malpractice, people not doing their due diligence, just simple.
I see.
Yeah, and so the idea is by having this huge world computer which you can build on top of, you remove all of the counterparty risk, which just means that there's no risk of even if a third of the network suddenly goes out because of some massive nuclear explosion that wipes out a third of the network, those 2/3 of the network can still support everything that was going on top of it. Maybe it'd be a bit slower, but you can still have that functionality. Whereas if a data center gets hit by a what's it called, a DOS attack, a denial of service attack, where these hackers just flood it, the whole thing goes down.
Right.
Or if there's some kind of natural disaster in a certain area, or the company becomes corrupted. So that's where Ethereum comes in. That's the difference between like a simple payment system, and then you have Ethereum, which is a payment system plus everything else.
Right. Okay. I think that kind of answers what I was getting at, and I do feel like I have a better understanding of the markets now. But then my skepticism there still isn't quelled at this point.
Yeah, fair enough.
My main point being is that I know it's early days still, and as I say, it's only really been around since the late 2000s.
Yeah.
And I guess I haven't seen it on an everyday basis. Like, I understand, again, being friends with you and knowing people that are around my age range that are into finance and economics and things like that, they will advocate for these cryptocurrencies and they will explain to me the benefits of them and the fact that they use them on a nearly daily basis. However, if I go to like Co-op now, like, I don't see anything. There's nothing visual for me there to realise that I could be transferring my money. I don't know if that exists. Like, can I go to Co-op now and spend Litecoin there, or? Yeah.
So, for example, I have a debit card in my pocket which is linked to my Bitcoin account, but it's okay. So that's a Wirex card. What you're talking about used to exist. Visa last year and for a few years before that used to support a system where you could have a Bitcoin account directly hooked up to a debit card which you could use for your coffees, your beers, your shopping, everything like that. And then after a certain amount of adoption, Visa just cut the service off.
Why?
Well, they said that, I think the official reason was that cryptocurrencies might be used for money laundering, and they don't want to be affiliated with that kind of activity, so they're going to cut the service off. We in the crypto community lean more towards the idea that Visa became aware of the potential disruptive nature of this technology and how it could mess with their business models and their revenue streams. Okay. And so they cut it off to delay that kind of payment system because they're making so much money from the conventional payment systems as is.
So there's like an old world, new world conflict here.
Yeah, exactly.
And they've got their interests and they want to reserve their interests and to do so, they have to, I guess, ignore the new wave that's coming through, which is the Litecoin.
Yeah.
Litecoin. Okay, that kind of makes sense. How would you ever even work towards getting over something like that? Like, they're so established, and I mean, I'm not trying to defend banks or Visa or anything like that. That would be the last thing I do.
Don't worry.
But at the same time, I don't understand how this battle's won, I guess.
So there's a few ways. The crypto community foresaw this coming, and the ones who didn't foresee it coming, as soon as it happened, started to make contingency plans. And so, for example, one of the biggest companies in the crypto space has just bought a German bank, which already has the payment infrastructure that's already all the way through Europe.
Right.
So the idea is that they're now going to convert that traditional payment system into a crypto payment system. And actually a really, really, really significant announcement that happened only a few weeks ago is that Starbucks, one step back, the company that owns the New York Stock Exchange is called ICE, Intercontinental Exchange. They actually own the New York Stock Exchange, biggest exchange in the world. They decided this year that they're going to release a Bitcoin exchange called BACT, BACKT. Okay, and it's going to be a exchange it's going to be a colossal exchange which institutions like traditional banks, traditional hedge funds, traditional markets can use that as an entry and exit point into the cryptocurrency markets. Okay. So that's very significant, but more significant than that, they released an announcement a couple of weeks ago saying that they're teaming up with Starbucks to integrate cryptocurrency payment systems into every Starbucks in the world.
Okay. So is the idea that you have to go on like a business to business scale, like there's going to have to be some kind of deals done between privately owned companies and cryptocurrencies? Is that how it's going to work, or is it?
Yeah, I suppose the basic idea is that now that this Intercontinental Exchange is getting involved with their backed exchange, they're now teaming up with Starbucks. Well, Starbucks is going to lead the way, because as soon as they start doing it and people start looking at that brand more favorably, more futuristically, well, it's going to be a signal to everybody else in the market to start accommodating a cryptocurrency payment system. That's just how it works. Like once one domino goes, they all go. Yeah,
see, I kind of understand that, but then I guess because Starbucks in itself its target market are also more likely to be involved with crypto. Is that not?
Do you think?
Is that unlikely? Well, I always, in my head at least, I associate Starbucks with a younger generation, also kind of people that are on the go, and they're working on the go, they're doing all these things. Like, I feel like these people would be the more likely to use it. Once you get to like a slightly older generation, like I'm trying to think of a company that would be a good example, like Edinburgh Woolen Mill, right?
Yeah.
They're not going to adopt crypto anytime soon because it's not in their target market's interest to do so. And I guess once it's the point of having the universality. Like, I want to be able to go to Edinburgh Woolen Mill to get something for my nan, but I also want to go to Starbucks on the way to get a coffee. And I know I can do that by using Visa at this point, but I know that, I'll get to Edinburgh Woolen Mill and I'll be like, I can't buy this with the system that I have. Does that make sense?
Yeah, no, I get you. And what my reply to that is that it's just one step at a time. The ultimate goal is to have a fully integrated cryptocurrency payment system in every payment system that is in the world. But you have to take steps. And the fundamental point is that for many years now, because I'm in so many Bitcoin forums on Facebook and on LinkedIn, so like you can go on those forums and you can see in hotels in Vienna, Bitcoin accepted, in taxis in London, Bitcoin accepted. Those people are doing peer-to-peer transactions. That's been very small scale. What we're talking about now is institutional and corporate adoption of these cryptocurrency payment systems, and that signifies a massive leap forward in our march towards a fully decentralized global financial system. But it just takes time. As I say, a good analogy for where cryptocurrency is in terms of development and adoption is 1992 with the internet.
Right.
Yeah, it's going to
take a while and it's still not there now. It's just...
The technology has a lot of potential. There's early adopters. I'm an early adopter, and there's people who can see where this is going, but there's not that many.
Right.
The technology itself isn't that mature. Like in 1992, if you tried to use the internet, the functionality would be extraordinarily limited. Like you'd be able to send an email, maybe a couple of emails. You wouldn't probably be able to attach photos. Maybe you would be able to attach photos. Definitely wouldn't have been able to attach videos. And then slowly over the years, as interest started to develop and as people started to see like the potential of this technology, well, then it starts to accelerate. And the change that we've seen within the internet's lifespan, which has been about 20 years, has fundamentally changed the way that humans interact, the way that society is structured, the way that content is created and consumed and distributed. Well, we're talking about something that is not only on the same scale, but in my opinion is going to be bigger and more significant on a societal level when it comes to payment, because fundamentally we live in a capitalist system. Everybody spends 8-9 hours a day earning money, but what is money? Like, is a damn good question to ask. What is this thing that everybody spends their whole life doing? What are the beggars asking for on the streets? What can't the government get enough of to afford these programs? What is this thing?
Right.
Yeah.
Just because it's such an abstract concept. So
yeah, exactly.
Going off on other continuations of my skepticism.
Okay, right.
Right. So you could win me over eventually. We'll see. But,
okay.
So as you know, I work in a field that is so I work in psychedelic drug research, and
yeah, you do.
I work get a little laugh every time I say that.
Yeah.
So this was a field that saw great acceleration for a few years, and it was amongst the people that were the people on the ground floor. They saw it as an amazing advancement in psychiatry, and then because of fear and because of some institutions and things like that, they got banned. And it's only really now, like 40 years later, that there is some institutions that are coming around at an extremely slow pace. And what's to say that this won't happen with crypto? Like, what's to say that governments around the world will just stop regulating extremely heavily on them, or just banning them outright and saying, it's a prohibition against using this form? Because they could base it on the same reason as why other people don't want to get involved with crypto. Visa's reason is, it's going to be used for drug smuggling, it's going to be used for just all sorts of bad stuff, and then they can spin that in such a way to garnish public appeal, and then it gets stigmatized. You know what I mean? So I think there are some parallels that can be drawn between those two things.
Yes,
and do you share that fear, I guess?
Well, not so much. So in the sense that even in like a draconian sense, if they were to clamp down on cryptocurrencies in the same way that they clamped down on drugs during the drug war, which we're still feeling the effects of, well, like, look around you. Look how many drugs people are using every single day. Go to any bar or pub or nightclub in the country, there's cocaine all over the place.
But it's still it's in a more dangerous market right now. And I'm still thinking there's still a parallel there. Like, people could lose money because they're doing it in an unregulated way. I don't know if it does.
Yeah, well, I suppose, first of all, let's break it down. So first step is usage. Would the prohibition of it limit its usage in society? I don't think so. Simply because if you look at drugs, are an amazing example of that. The amount of draconian laws that have come into place, like stop and search, and all these things that have limited our ability to be sovereign and safe individuals in our own society, which have been inflicted on us by government with no scientific reason or legitimacy. People still use drugs every day. If you go to Singapore, or you go to the Philippines, where the penalty for drug use is death, they still use drugs. There's plenty of people still using drugs. And so, first of all, with usage, no. Second question is, do I think that the governments around the world are going to ban it? Some of them, and they already have. Like, China tried, but good luck with that. Like, it hasn't worked because people are going to use it whether the government want to or not. And it's even more important in countries that have a destabilized currency. In the West, we have fairly stable financial systems without hyperinflation, and that means that we can plan 10 years ahead, and we can pretty much assume that the currency is going to be relatively the same rate with the same purchasing power. That's fine. Go to a country like Venezuela, Argentina, Greece, where the currencies are destabilized. Well, not so much Greece because it's part of the euro, but if you go to Venezuela or Argentina or many countries around the world where they're experiencing hyperinflation, they don't care if it's illegal or not. If they don't use Bitcoin, they can't feed their family. And when it comes between feeding their family or breaking the law, that law is irrelevant. So that's another thing. And then there's a good saying that one of the thought leaders in the space uses, which is, you can't ban Bitcoin from your country, you can only ban your country from Bitcoin.
Okay.
Which means the network's still going to operate whether the country is part of it or not.
Right.
Okay. So fundamentally, do I think it's going to play a big factor? No. And also, the fact is that, especially with the UK government, right, the Conservative Party are in control. The biggest lobbyists for the UK Conservative Party are the banks. Okay. Well, what we've seen in 2018 is that the banks are warming up to Bitcoin. Not because that they love the revolutionary side of the technology. They see a potential to make a lot of money.
And a fear of being left behind, I imagine, as well.
Yeah.
It's a combination of those two, right?
So they're now going to start massaging the government to try and allow easier access to these currencies for these institutions so they can make money. And so that means that I'm not particularly concerned. Like, so for example, actually, you sent me that article a couple of days ago of Diane Abbott saying that she's going to regulate Bitcoin because it's a Ponzi scheme. There is no nuance in that opinion. Like, that's just ridiculous. Like,
that's why I sent it to you.
It's just insane. But, you know, some people aren't going to be convinced. Like, some people weren't convinced that the internet would be a useful thing or an important thing until like 2005. Well, there'll be people who...
And people still fight it now. I mean,
there's people now who just see the internet as a purely bad thing. But the internet's a tool. It can be used in good or bad ways. And that's the same with cryptocurrencies. It can be used for money laundering and buying drugs and, you know, paying for kidnapping, ransoms, whatever. Or it could be used as a decentralized payment system which has no barriers to entry for anyone in the world, no matter if they're based in South Africa or Sub-Saharan Africa or Venezuela or Oxford in the UK. Anyone has equal access to this, which is more revolutionary for the poorest in society than it is for the West. But for those poorest in society, this is their only access point into developed financial system. And without access to a financial system, there's no way of developing any kind of standard of living individually or communally. And this is a viable alternative. And it isn't completely viable because of some of the problems we're experiencing with transaction speeds and exchanges that are being hacked. But this is where the internet was in 1992. There is a long road ahead of us, but every day we're getting closer to the desired outcome, which is as much economic freedom for as many people as possible.
Okay. I mean, I'm warming to it, right?
Good.
You know, you drive a good argument.
Thank you.
But I guess the more niggling question that me and a lot of other people have is, should I invest in any cryptocurrencies? Like, if I've got I'd obviously be super worried about losing out, or if they suddenly became really big, if I was like, I didn't invest now. But at the same time, if I did invest now and they suddenly crashed, then I'm going to feel equally as, you know, annoyed about the situation because I've lost a lot of money, right? So should I invest in cryptocurrencies right now?
So first off, I'd say now is a very good time to buy, just generally speaking, without tailoring it to your circumstances. The market has taken a massive crash. The bubble has burst, and now Bitcoin price is, you know, around $3,500. You know, it's obviously a ridiculously simple analogy, and I know how childish this is, but since I've been involved in 2014, I'm going to do a finger graph, which is that when I got involved in 2014, there's been a bubble that burst in 2014, which is when Bitcoin went to $1,000.
Right.
And then the bubble burst here. I jumped in just there, and then it flatlined. So like bubble, pop, flatline, bubble, which is this bubble, pop, flatline, and now we're flatlining around 3,500. The basic premise is we are so far away from mass adoption that it is basically a joke. There was a study done a few months ago in America which said that 2% of Americans owned some cryptocurrency.
Right.
I want to see a further investigation into that, which is how many of those Americans, what percentage of them own more than $100 of cryptocurrency.
Right.
I'd say it'd be a very small proportion of them, of those 2%.
Just people that have dabbled, right?
Just people who have dabbled, maybe, like honestly, maybe they've just used the dark web once or twice.
Yeah,
and you know, you don't want to use that analogy, but it really, a lot of my friends who are interested in crypto got in because of that avenue. And so we're so far away from mass adoption, and the point of cryptocurrency is that there's a limited supply, especially with Bitcoin. There's 21 million that will ever come into production, ever come into creation. And so the more demand there is, the higher the price is, because you can't create more like you can with normal conventional money. And the Central Bank of England can just create more money whenever it needs it, whereas there is no central bank of Bitcoin and there is no person who can create them as and when they please. So as demand increases, supply stays still, price necessarily increases.
But then, so sorry to interrupt.
Go for it.
But then, surely, how does 21? So you put that 21 million out there, but like that, each individual Bitcoin in that 21 million, what is that physical Bitcoin worth?
Okay, I will come to that, but I need to close off this question because I was just talking generically about Bitcoin investment, but to tailor it down to that's just like generically speaking. So to tailor it down to an individual person, there's 3 questions you have to ask them: how much disposable income do you have, and how much do you have saved up? What time horizon do you want to invest in, and what's your risk tolerance?
Right.
So if they're not risk tolerant, don't get involved, because there's a quite considerable risk involved in these cryptocurrencies, as there is with any immature technology. So if you have a reasonable amount of savings, if you're looking for a 3 to 10 year investment, and if you are okay with risk, then I think this is the best investment opportunity of our lifetimes. So yeah, okay. And now, what was the question? The second?
Yeah, so it was like, we've had all this talk about the rising and dropping prices of Bitcoin, but normally with something like, I don't know, my mobile phone, I realise that it has a set price, and that obviously devalues over time, and it's expensive when it first comes out or whatever, but then I know where I stand with it because it has that price. How much is like a physical, it sounds stupid now that I'm saying it, but a physical Bitcoin worth? If there's 21 million of them made, they must have some kind of potential value.
Yeah. So this is the point that most people get most confused on.
Okay.
Whenever I talk about Bitcoin or any cryptocurrency, the point that is most often brought up, which people seem to think is the most solid, like bulletproof argument, is that it has no value. That's just not the case. So when it comes to Bitcoin, the way that Bitcoin is created is through a process called mining.
Right.
And
What's mining?
So earlier when we spoke that you don't need a central intermediary to control transactions, it's all done through this network, through this mathematics and software. Okay. Well, to verify a transaction requires quite a lot of computer power to verify it. And the way that the network ensures that it has that computer power is that it says explicitly in the white paper that the creator of Bitcoin released that anyone who puts their computer power towards the Bitcoin network and tries to verify transactions and successfully does verify transactions will be paid out in Bitcoin automatically by the software. So there's not any individual saying, here's your Bitcoin, sorry you didn't win Bitcoin today, but it's all done through this software that was already encoded deep within the software at the time of release. So that there's a certain amount of this Bitcoin that's given to miners every single day as long as they verify transactions properly, okay? But it's not cheap to verify transactions. To verify transactions, you need 2 things. You need computer power, which is computer hardware, and computer hardware is expensive because every year there's new computer hardware coming out that is specialized for mining Bitcoin, which is very expensive. So that's one cost that you're footing, and the second cost you're footing is electricity bills.
Right.
It's very expensive. So every Bitcoin that's created is given as a reward for miners who have put their computer power towards the network and have paid electricity bills to verify transactions. And so the idea is that this Bitcoin system is just a very advanced incentive system. So the incentive for people to use it is so that they can have a decentralized currency that no one can control, blah, blah, blah. And the reason that people will verify it is that they can earn Bitcoin without having to buy it, without putting money down for it initially. They can earn it over time through this process. So then the question is, how expensive is it for a miner to create a Bitcoin? And I actually don't have the number to hand, but it's definitely in the thousands of dollars.
Okay.
So that's on the technical level. It's like it's definitely worth that on like the expense on computational power and on electricity. So, and you have to contrast that to the current financial system, right? So people often have the misperception that the pound has value because in the Bank of England is stored this massive vault of gold. Right. And every pound has a certain correspondence to gold. That isn't true. What happened in 1971 was that America went off the gold standard and the UK quickly followed, which meant that up until that point, if the government wanted to spend more money, they needed to get more gold. They needed to buy more gold, and then they could create more money that would have a ratio that would keep them, paired and matched over time. When they came off the gold standard, it meant that they had full control of the currency and could print as much as they wanted. And then people could say, well, it costs money to print. It costs money to print money, and obviously that means that there's value in the actual printing process. Well, that's not true, because first of all, printing money isn't expensive. But second of all, 99% of all money in the system is digital.
Right.
So when people say the central banks create money, they're not printing money. They're typing numbers into a computer and hitting enter, and it creates this new money supply.
And there's nothing different from that to a Bitcoin then, right?
Well, no, the difference is that when you make normal money, you just type in 10 billion, enter. The central bank does that, and it just creates 10 billion. If you want to create more Bitcoin, you need to buy hardware equipment, and you need to join the network and expend a lot of money on electricity and a lot of money that you put towards computer power to create Bitcoin in order to take that and have a reward for verifying transactions. So there's basically...
But you can't create more then, sorry to interrupt again, but so if you're saying that there's a 21 million limit, then how do you make the 21 and 1? Or can you?
You can't. It's like it just tops out. The software just stops.
So surely is there an end date of mining?
Yeah, 2140, 2104. 2140, I think.
Wait, why that date?
Well, because it's released on a predictable supply release. People can make estimations on when the final Bitcoin will be mined.
Especially then you're estimating the computing power in the future.
Well, no. So that's actually a really good question. But the network is set up in such a way that it doesn't matter if you. The way it's set up is that if you buy the most advanced software in the world and the most advanced hardware in the world, which can verify transactions really fast. The idea behind the network and the way that it's set up is that it doesn't actually matter how advanced your computer equipment is. You can only mine a block every 10 minutes. Okay. And so if you mine a block, if you're the miner who mines the block, which has all the transactions in from the last 10 minutes, then you're given the reward, okay? So everybody else who was trying to do the same thing didn't get it. So you're going to win the reward instead of everybody else because you've got better equipment.
I see.
But you can't win more rewards than every 10 minutes.
Right.
So some people think that if they get really advanced computer power, instead of having a reward every 10 minutes, they can get one every 2 minutes because they're so fast. But the software itself adjusts so that it makes sure fundamentally that there's only a block around every 10 minutes.
Okay, right, that makes sense.
So to summarize, there's no marginal cost to producing fiat money, but there's a massive marginal cost to producing more Bitcoin.
I see.
That's the theory.
Yeah, right, okay. Wow, okay, that's a lot to take in, I guess. So I've known you for a while now, Anthony, and I know, and this is actually my first time I've been to your office, but I still don't understand really what CoinSchedule do and what they do in crypto. Because you've tried to explain to me once or twice, but normally we go off into a tangent onto some other argument about crypto.
Yeah.
So I guess in this interim, when I'm going to shut up a little bit and listen to what you got to say, what does CoinSchedule do?
So one of the beautiful things that Ethereum has offered the world is that it offers a funding mechanism called an ICO, which means an initial coin offering. So if you're a big company and you wanted to generate a lot of money, what you would do is you do an IPO traditionally, which is where you do an initial public offering, where you make your company public and then you sell shares in the stock market, and with that money generated from the sale of shares, you can then invest in certain projects, you can develop a company. So that's the traditional route of it, and that's what an IPO stands for. The problem with that is there's many barriers to entry. First of all, you need a company to be a certain size in order to generate investor interest. Second of all, there's massive barriers to becoming an investor because you have to get all the accreditation to hold stocks and shares in these companies.
Okay.
The third barrier to entry is that there's a massive legal fees and regulatory compliance in order to do these IPOs properly. So on the Ethereum network, there's as I say, there's something called an ICO, which is an initial coin offering, where a company that wants to develop, where a startup that wants to develop a certain technology, or they have a certain vision for something in the crypto blockchain space, they can create a coin called an ERC20 token, which is just a fancy name for a token that they sell in order to generate money. And then they sell that token to the community, to any interested parties, any interested stakeholders, and then they use that money to create the business, to create the vision that they had in store and that they planned out from the beginning.
Right.
Okay.
I'm following so far.
Okay, so that's what an ICO is. It's an initial coin offering. The problem with ICOs is that there is immense potential in the funding mechanism, but there's massive problems in the implementation and the amount of scams in the space.
Right.
And it's just such an easy.
Is that inherent in all of crypto at the moment, like the scams and stuff? Is this
yeah, but ICOs have been like the center of the bullseye for scammers.
Oh, okay, right.
Because there's so much hype.
Yeah.
And people.
There's also a lack of understanding by the people they're going to be selling that thing to.
Yeah,
right?
yeah, 100%. Like uneducated investors, dumb money. They just jump at the idea of being involved in Bitcoin 2.0.
They like the word, yeah.
Well, it's like that's the way they look. Bitcoin is up. I remember when I got a message from my friend saying Bitcoin's up $1,000 today.
Right. Because
they knew that I was into crypto and they knew I was doing my dissertation, and I got a message saying, "Dude, Bitcoin's up $1,000 today." That's like the kind of hysteria that people were experiencing at the end of last year, start of 2018.
Right.
And so people just started flooding money into these projects. Mm-hmm. But it was really hard to tell what was a legitimate project and what wasn't. And so the way that investors would find projects is through listing sites. Mm-hmm. That you would list a project, and the project would be for like a new blockchain, a new crypto, whatever. And then investors would find you, and you would pay to be on the listing site. Problem is that those listing sites were facilitating so much of the scams that were happening in the space.
And then they're not trusted, right? After that.
Yeah, they're not. Well, the problem is that a lot of the ones that were facilitating the corruption has still remained in business and still made a lot of money. I don't want to name them. That's a bit bitchy. I don't want to go down that route. But CoinSchedule came along and they started off as a conventional ICO listing site. But Alex, the CEO, started developing an artificial intelligence algorithm alongside the University of Oxford, mm-hmm. which takes all the data points possible from every project, whether it's the LinkedIn profiles of the members, to the way that the way that the token is structured, the way that the vision is for the company, where the company has been registered, the background of everybody. I took in every possible data point, and at the end of this like big calculation, it would spit out an A, B, C, D, E ranking. Okay. And C was seen as investment grade.
Right.
Right.
And
so
A being the gold standard.
Yeah.
Yeah.
So it meant that anyone who was a scammer mm-hmm. would not come to our site, because they would be put through this. And also, one of the most important, well, there's two important things I forgot to mention. One of the procedures you have to go through in order to be listed on CoinSchedule is a interview with our head of legal. Right. Like the CEO from the project and our head of legal have a face-to-face interview, and he asks the questions and he judges people's reactions, their posture, the way they answer, the legitimacy, if everything strings together. So that's a big deal.
I was going to say, do you get scam? Like, does he recognise scammers? Like,
I'm sure he's picked them. I actually haven't asked him that, but I'm sure because in all the scams that have happened since the trust score has been live, CoinSchedule's never hosted any of them.
Wow.
Yeah, it's big. It's really big. So that's one thing, and the second thing is that we can't manipulate our AI. Mm-hmm. We can't do it. Like if you tried to come to me with £1 million or 50 Bitcoin and said, "Can you bump me from a C to an A?" Personally, I'd love to do it because I love 50 Bitcoin. Mm-hmm. But no one has any access into the system. It's a self-contained system, which is actually going open source soon to prove to the community that this is actually an open source system. And that's a really revolutionary thing, because the mechanism itself of ICOs is very disruptive mm-hmm. to how revolutionary projects can find the necessary funding to do what they want to do. Mm-hmm. Because a lot of these projects would never find funding through conventional venture capitalist routes, would never find funding through an IPO route or seed funding. These are very closed off channels for many groups, many projects that want to do something disruptive, something mm-hmm. fundamentally big. Now the ICOs come along and it can really change the game, but it's been struggling under the weight of scams for a while now. Right. And so CoinSchedule is basically it is simply a way of ensuring trust in an untrustworthy environment to facilitate the best possible use case of a revolutionary funding mechanism called an ICO.
Right. Okay, I think I do understand. I think that's actually probably the best way that you've explained it to me. So
winning.
I'm finally on the same page.
10th time, probably.
It's only the 10th time.
Yeah.
I will also warn you that I think the thing's about to run out.
Okay. Should we end it there?
Should we end it there?
Alright, Jim, thanks for coming up, man.
Thank you very much for having me.
Thanks for watching.